Hi traders, Tirunalpan here, founder of Master the Markets, Elite Traders Conference and the Traders Open Day. So today we're going to be looking at 3 categories for strategy rules. Okay, now traders, this is very critical, okay, because the most important concept before we enter into a trade is to have it already preset in our mind where we are going to enter and how we are going to exit. It's all got to be totally predetermined, and you have to visualize your whole trade setup, your trade management, and your trade exit. Okay, so all these 3 things must already be very clear within you, and you must already have spelt it out with so clear rules so that it's very clear in your mind, because the clarity leads to conviction and then finally leads to your courage to pull through any kind of loss cluster or drawdowns. So let's take a look at what these 3 categories are for strategy rules, okay? And mainly, let's take a look at the first one, which is your entry rules. So that will tie in with how should your trade setup look like? When should you actually enter a trade? Because the last thing that you want to do, traders, is to enter a trade just out of emotional impulse. That's the last one you want to do, because once you enter a trade by emotional impulse, when you come out of it, you'll be like, oh my God, why did I do that? And I've heard so many traders, over 20,000 traders that we've coached so far and talked to at seminars, all coming and telling us that, say, oh, true, I don't know why I really did that. I keep making these mistakes again and again. So one of the ways to stop that and to really nub that mistake right in the bud is by writing all these rules really clearly and so straightforward that you know how to follow it and to repeat it again and again. All right. Okay, so the entry rules now can be subcategorized into pre-entry rules, and also re-entry rules as well. Okay, re-entry rules. Pre-entry rules basically means before you enter the trade, what are the criteria for you that must set up for you to enter and then to trade that price or the instrument. The next thing is, if you do get stopped out, what are the rules for you to then re-enter back into that trade is what you've got to be looking into as well. Now, some points, some tools that you can use to formulate your entry rules here. Okay, I've given you 6 tools over here. Now let's go through them. One is price action. So you need to be very clear on how the price action should be before you enter into a trade. So for example, if you want to buy into a position, has it got to be 2 seller bars and 1 buyer bar, or is there got to be some kind of momentum decline, which you also need to quantify so that you don't get any doubt or emotional trading comes in. So that's all to do with your price action. So definitely do have a price action rule. The second thing that we are looking at is time frame correlation. So as I've explained in the other videos before, so you got to, for example, if you're an intraday trader, you got to correlate with a higher time frame, all right? Especially usually we recommend 3 time frames. So that will come on the time frame correlation. The third one is what we call, the third tool you can use for your rules is indicators. And there's thousands and thousands of them, traders, you know about them. Stochastic, MACDs, I can carry on, CCIs and all that. Next one is cycles and phases, okay? You also have to know your cycles and phases rules. You can also incorporate cycle and phases rules into your strategy. Finally, support and resistance rules into where you can enter into the market based on supply and demand. And finally, news as well, fundamentals. How long do you want to actually enter before a trade? How long before do you want to just actually exit a trade if news were to come out? So for example, if news will come out in the next 30 minutes, do you want to actually exit it? Or even do you want to enter a trade even before, like 30, 40 minutes before news comes out? So all those things you need to include in your entry rules, and usually as a good criteria, you need to include at least 3 to 4 of them, and we call it degrees of freedom, okay? Degrees of freedom. And you need to at least have about 3 to 4, ideally 4, minimum 3, okay, in your strategy. And of course, as I've mentioned before in our other talks and webinars that we've done, you need to choose, mix and match these rules according to the concept and the objective of your strategy. Right, the second thing that we're looking at, once you've got your entry rules based on those 6 tools, and then we're looking at your stop loss rules, okay? We're looking at your stop loss rules. Now, stop loss can be further subcategorized into initial stop loss rules and trailing stop loss rules. Okay, initial stop loss rules and trailing stop loss rules as well. Now, what do I mean by that? So before you even enter the trade, you need to know where the stop loss is already going to go, which is your initial stop loss. Then once you enter into the trade, you need to then know how you're going to manage your trade, and then to trail that stop loss progressively. Okay, now that is very critical. So you need to know all of that before you enter the trade. The final thing is what we are looking at is our target rules. Okay, our target. Where are we going to get out? Where's our target? Now, in terms of the target rules, we are looking at pre-target. That is, before we enter the trade, we already should know where we're going to get out. And finally, the intra-target as well. So for example, let me just give you this example. Some of you are familiar with the dollar Swiss move, the Swiss franc. Man, it was crazy fall. It was a price shock, as we call it, of adverse move about 5,000 pips in just one day. Okay, so for example, when price adverse shocks like that happen suddenly in the market, you must have plans to get out of the market, and that's what we call intra-target rules. Okay, so those are the three categories that you definitely must have in your strategy rules so as to consistently execute them. And not only have those rules as well, so as to remove doubt and emotions, you need to quantify those rules as well so that you can really help towards your consistent execution. So the three things in summary again: entry rules, stop loss rules, and target rules. And the objective of writing all those rules, traders, is so that you really get clear in your mind on how the trade should look like. Okay, you already predetermined everything, and you already can visualize how everything should be before you get into the trade, while you are in the trade, and how you should get out of the trade. So those three things, as we always say, is what? So it's trade entry, trade management, and finally trade exit. Okay, I believe that this video has been very helpful. Definitely do go and do your research on your strategies. Definitely go and get them into these three categories, and you clearly can see how much clarity and conviction you will have in your strategy, and how it will help you with your execution and your strategy performance. Till the next time, traders, as we always say, stay disciplined, follow your trading plan, and keep trading like a master.